Good evening, all. Welcome you all to this day 3 of Masterclass on file your IT returns for salaries. So today session will be as follows. This will be the agenda for today's class. We'll be having a poll to start with as usual, and there will be a discussion on the assignments given. If at all you have not completed, we will be having a discussion now. After which you may have to again go and complete the assignment. Then we will have discussion on ITR 1 and we'll have discussion on ITR 2. We'll be going through ITR 1 and 2 so that this will help you to update the returns and have a hold on the return. Okay. After this, we'll be going with the income tax website, registration of a PAN. How do you register a PAN? Then I will show you how do we log in. So that if we are able to complete this and complete the assignment properly, I am sure by tomorrow, end of tomorrow, you will be having a clear hold on how to file your returns. Okay. So after tomorrow's session, if at all you have any issues, on Sunday, I will be having a special bonus class for helping you out in filing the returns. It will be a separate free class and a bonus class for students who have attended and who are still not able to file the returns. Uh, you're still not able to file the returns. Ah, 1 second, please. आवाज करना वो. Yeah, sorry, student, there's a disturbance. So I just had to stop. Okay. So this is what is today's agenda. So let's start with the poll for today. So I'll be giving 3 minutes as usual to uh, answer the polls. So your poll starts now. So this is the basic information you people should have before you file the returns. So answer the polls. All this information are the basic things which everybody should know before you file the returns. It's 2 minutes. Come on, students. I'll give 2 more minutes to update. Okay, good. Everybody have answered. So what is the due date for salary returns every year? Generally, 31st July of the assessment year. So the 31st July of every year is the due date for filing of salary returns every year. So after completion of March, the financial year completes on March, the next immediate July, the July will be the due date for filing the returns of previous income for the year ending previous March. Okay, so most of you have given the correct answers. What is the due date for 21-22 for salary returns? So as you are aware, because of the new website being launched and by the department, they have been extending that. The first the due date which was extended was September. Sorry for that. This 31st September instead of 30th. Okay, so it has been now extended to 31st December. Can we file the returns after due date? Yes, we can file the returns after due date, but there are some issues that we'll have to know what are the things. Okay, so have you completed your assignment for day one? There are only few people who have completed the assignments. The rest have to complete. Same with assignment two. You have not completed the assignments for day two also. So request to people to check your login, select the tab. You will have to select a specific tab. If you are a subscriber or if you are purchased more than one programs, you have to select which event we are attending now. Under that section, you will have homework assignments which are available. You will have to update and submit your assignments there. Okay. Okay. Then next, what is the next thing is, what are the consequences of for filing of returns after due date? Okay, three options were given: can't file, can file with interest, can file with penalty. Interest will always be there. Even now, as of December, you will have to file with interest, but after due date, you have to pay with penalty. So there is a penal clause that will be applicable. Are you aware that returns for 21-22 cannot be filed after certain date? So this is very important thing that a few of you doesn't know. So there is a due date after which even with penalty you will not be able to file the returns. That is very important thing that you should know. Okay, have you checked what is the form applicable for you? Few people say yes, there are few people still say I don't know. So if you are willing to finish off your returns by tomorrow, then you have to work hard. You have to work towards it. Get aware of the forms which are applicable for you and start preparing for that. Have you arranged for the documents required for filing? If you are not arranged, then tomorrow is the day. You have the whole day from today night till tomorrow evening till we start the seminar. You have the entire time to arrange for the documents which are required for filing and get ready with the documents so that I can help you in filing. Okay. So next very important thing is, have you registered or do you have a login password? So this is also very important thing which you should know, that if at all you have not registered, register that immediately. And if you have a login, keep ready your login to file the returns online, because today we'll be going with manual to understand what is the requirement. Tomorrow we will be taking online. Okay. Okay, so here we end the poll. I think you have a clear idea of whatever we discussed. Okay, so next, what is the assignment which was given? So I am going through the assignment again here. So what is the income tax exemption limit? So I want to make it very clear. The income tax exemption limit is 2.5 lakhs. Okay, what is the standard deduction? What is the standard deduction under salary income? So the standard deduction under salary income is 50,000. Irrespective of your income which you are having, the standard deduction available for every person during the year is 50,000 rupees. So what are perquisites? Under which head is it taxable? So as it has been discussed, perquisites are nothing but the non-monetary benefits which are given by the employer to the employees. Okay. So this is taxable under the head salaries. What is the standard deduction under income from house property? So as we were discussing, standard deduction or deduction under house property is available only in case of let out property, and the deduction will be straight away 30% of net annual value. And what is net annual value? The rent received minus the municipal taxes. This is the net annual value. On this, 30% is the deduction available on house property. Okay, who can claim deduction for property tax paid? As I told you, only people who declare income under the head income from house property can show deduction under property tax paid, because property tax paid is deduction available from gross rental value received. So if you have not received any rent, the deduction of net the property tax paid will not be available. Okay. What is the limit to claim interest on housing loan? So the limit to claim interest on housing loan, whether it is self-occupied property or it is a rental property, is rupees 2 lakhs. Even if you have paid, the limit is 2 lakh. That means whatever interest on housing loan you have paid will be considered as a deduction from your income from house property. So if your income, the interest paid during the financial year is less than 2 lakhs, so that amount will be available. Entire amount will be available as deduction under the head income from house property as interest on housing loan paid. But if the interest paid by you is more than 2 lakhs during the financial year, the department will not give you benefit of that. That you can't tell I have taken 1 crore of loan, I have 10 lakhs of interest I am paying, so I want to claim 10 lakhs as interest. No, the restriction is now to 2 lakhs. Earlier there was a benefit which was available. Now it is restricted to 2 lakh rupees. Which is the new income tax portal available for filing? So as I told you, income tax india.incometax.gov.in is the new website which is available, which will be used for filing. Okay. So what is gross total income? Gross total income is nothing but the summation of the income under the 5 heads. Which are the 5 heads? Income from house property, income from salaries, capital gains, income from business and profession, and income from other sources. The total of all these 5 heads is called as gross total income. So this is the assignment for day 2, which was discussed. So what is form 16 issued for? So form 16 is a document or a form which is issued in respect of salary income. Okay. Form 16 is a TDS certificate issued by the deductor or the employer in respect of salary paid to the employees. So this is Form 16. So what is Form 16A issued for? So if the TDS or the amounts paid by the person are in respect of any amount other than salaries, it may be rent, it may be interest, it may be professional fees or whatever, anything which is other than salaries which is covered under TDS, then the form which is required to be issued by the director is Form 16A. Okay. So then what is Form 26A? Form 26AS is nothing but a summary or a passbook of all the taxes paid by a particular assessee for a particular PAN for the financial year. So it will reflect all the TDS which has been done by various persons against a particular PAN, and also it also shows what are the other taxes which you have paid, whether it may be advance tax, it may be self-assessment tax. So it is basically a summary of all the taxes paid by for a particular PAN for a particular assessment year. Okay, so 26A is form 16, 16A are the forms which are issued in respect of every year. Okay, so what is the form applicable for assessee having salary, income, income from house property and other sources? So generally the persons who are having these three income will fall under ITR 1, and if they have thus they satisfy certain conditions, if they don't satisfy certain basic conditions of having only one house property and having only one employer and things, then you have to go for ITR 2. And if you have along with salary income, if you have business related income or capital gains and other things, then you'll have to go to other forms also. Okay, which form is applicable for you is something which you need to decide as to what income you have. First ascertain what is the nature of income you have, classify under the various heads, which all the five heads you classify it, then check out which form is applicable to you as per the discussion we had. Okay, so next what I had told, take a print of the form applicable for you. If you have not done this, I had shared you in the assignment, I have shared you by mail what is the ITR 1 as well as ITR 2 is which is very important for us, which is that what is covered under our webinar. So keep this printout ready with you, and if you have not taken it, tomorrow morning or even today night, take a printout of that, start updating after our discussion. So by tomorrow evening, everybody should have the filled application form ready in front of you. Okay, this is the basic requirement. And what is important? So the form can be filled only if you have necessary documents. So what are the documents? Once you go through the form, you'll come to know. We will be going through the forms now also. It will help you to understand what are the requirements of the form. And as I told you, you require to first understand and fill the form manually. Only when you have a confidence, if you make a mistake online, it is a problem, it will be a problem for you. So I am telling you, fill up the form manually so that even if you have errors, try to correct it, get it clear, have a clarity, discuss with me if you have any problem. Once we are 100% sure that everything is correctly captured, then file the returns online based on the copy you have. This is how you learn. Okay. So I hope till here everybody is clear. This is what I had expected from you people. But if you have not done for various reasons, I know you people are busy. Even I am busy, but I am taking time out for you to help you out. So it is your duty to put extra efforts and see that you take benefit of this training which has been done. Okay. So for your reference, I am again putting up this tax computation sheet, which is very important. So what is tax computation? How do we compute tax? First thing is arrive at gross total income. Second thing, know the deductions you are eligible for. Check out the deductions under which section it is applicable. Take benefit of the deductions under the Income Tax Act. Then arrive at the total income. So gross total income minus the investments and deductions will come to the total income. Then you will arrive at the compute the tax at normal rates or special rates. Then depending on that, calculate the surcharge and education cess as applicable to you. Then you will get check out whether rebate is applicable for you. As I told you, rebate is available under section 1787A for income below rupees 5 lakhs, and the waiver is applicable for tax liability up to 12,500. So check this also whether you are able to get a rebate or you are not eligible for a rebate. So if you are not getting a rebate, then you get tax liability. Tax liability will be coming in. Then you need to check out what are the tax which has been paid till date. Out of the tax liability coming, have you paid any TDS? Is there any TDS available for you? Or have you paid any advance tax or self-assessment tax? Then the balance amount will be either zero, or it may be balance payable, or it may be refund. So you can be ready for filing the returns if there is zero tax payable or if it is refundable. If at all there is a tax liability, then you will have to check out whether you will get attracted with interest for late payments of advance tax or non-payment of advance tax under section 234B and C. Okay. So this is what is expected from you people before you come for tomorrow's seminar. So that is the reason I have been having a gap of 1 week so that you put your efforts. I could have taken all the sessions in one time, but why did I give a gap of 1 week? So that you understand this and start preparing for that. This is the basic intention of giving you 1 week time. If at all you have not done it, then tomorrow is the day, not tomorrow, today. Even immediately after this class, you have the whole night, you have the whole day tomorrow. You have to finish this, and this is what is expected from my students. We work irrespective of our time when we have deadlines. So this is your deadline. If you want to file before completing the workshop, then it is left to you how you utilize the time and how you utilize my session to complete your returns within the deadline at a nominal price. I hope you are clear here. Now, this forms we have discussed. Now, before 16 everybody knows, 12A everybody knows, 16 you know, 26A you know now. So ITR forms. Again, I am showing you for the benefit what are the different forms which are applicable for you. So ITR 1, it is for salary returns and only for residents having income below 50 lakh rupees. Okay, and you should have salary only one house property income and other sources, then you will fall under ITR 1. If at all you have more than one house property, or you have other house which is considered for deemed income, or you have capital gains, sale of investments, mutual funds, sale of mutual funds, sale of shares, or any foreign income sources, okay, and any, even if you are salaried, if your income exceeds 50 lakhs, then you cannot go with ITR 1, you have to come to ITR 2. Okay, apart from this, you have any business related income, you will fall under 3 or 4, which we are not covering business income. So we will be covering ITR 1 and ITR 2 for discussion today. I hope everybody is clear till here. Any doubts, you can put it out in the chat box, or now we will start with ITR 1. Okay, so let's start the discussion with ITR 1. So I'll be sharing the ITR form with you people, and we'll be discussing one by one. Yeah. Can you see this? Can somebody confirm by chat? Are you able to see this ITR 1? Can you respond? Can anybody respond by chat? Are you able to see this ITR 1? Yes or no? Yeah. Okay. So this is what is ITR 1. What does it say? Form ITR 1 Sahaj. So what does it say? It is for the assessment year 21-22. So if you have not understood the basic concept, here itself you will fail. People get confused and fail here because they don't understand 21-22. So this is the first pitfall or the basic thing where you people fail to understand and get confused. So it is very much clear even in the form heading itself as to what are the conditions for going ahead with ITR form. So here also it is mentioned, it is for individuals being residents, okay, having income up to 50 lakhs and having income from salary, one house property and other sources. Okay, so and one more thing, it is very important, if you are a director of a company, okay, if you are a director of a company, even though you have salary income, even though you have income below 50 lakhs, you will not be able to use ITR 1, because for directors there is a separate form which you have to mention the directorship details. So ITR 1 does not reflect that details. So ITR 1 cannot be filed for director of any company irrespective of the income below 50 lakhs. Even if he has only salary income, even if he has only income below 50 lakhs, he cannot use ITR 1. He has to go for ITR 2 only. Okay, so this is very important thing. So what is the general information? You have to please keep a notebook and pen ready with you. As I go through, I will tell you what are the important things. So make a note of what documents are required for you to keep it ready before we attend or before we start the class tomorrow. So what is the first thing which is asked for? This is PAN number. So it is a 10-digit number where the first information is particularly part A, which is general information. So any person will be able to fill this form. Okay, this is your written, you are filling, so there is no chance that you make error. Okay, so what you have to fill first? The PAN number. This is a 10-digit PAN number. You have to take your PAN and update the PAN over here. Okay, what is next? Date of birth. Okay, so here you have to mention the date of birth in DDMMYYYY. So which date of birth do I update here? The date of birth which is available in the PAN only has to be updated. If the date of birth as per PAN and your other records are not matching, it is not relevant. You are filing income tax returns, whatever is there in the PAN as date of birth will have to be updated here. Okay, so Aadhaar number. So Aadhaar number is the next information which is being to be filled by you. So this information is very crucial because income tax now has linked Aadhaar for OTP verification. So unless you have your Aadhaar number linked with your PAN, you will have an issue. You will not be able to even create a OTP or e-filing being done. So it is very important. You have your Aadhaar. So next information which you require is Aadhaar number. Next, mobile number. So this is the mobile number which you generally give for the department contact. So if the department has any information for the message to be sent or information to be sent, then this is the mobile number which will be used by the department. So you have to provide your mobile number which is to be given to the department, and email address. So you will have to provide your personal email address which is relevant for your returns. Okay, so tomorrow this is the email ID where you can see any communication from the department. It may be with regard to the refund received or ID returns acknowledgement, or your any document with regard to communication with the department will be through this corresponding email ID. Okay, so make sure, since this is personal return, don't give any of your corporate email IDs because this will be permanent information. So tomorrow if you are giving per company ID, you leave the company, the data will not be able to, you will not be able to get it back. So give your personal ID where you can retrieve at any point of time any information or correspondence with the department. So address. So this is the address which will be used for communication presently. So many people will have a doubt as to what address do I fill. Many people don't have a single address in the PAN, the Aadhaar, and the present state. You have three different addresses. Okay, three different addresses. So which address do I fill? You have to generally fill the present address or the permanent address where you will be generally available. So if you are not having the single address, I request you to update all the three documents with single address. The income tax, your Aadhaar, and the returns should generally have the same address. And if it is not there, you put the present address or a permanent address which is there and file the returns. Okay, this is very important now. So you will have to tell us under which section are you filing the returns. So it is 139.1, that is on or before the due date, or 139.4, is it belated return, or 139.5, revised return. So which return are you filing? Since you are filing within the due date, you have to tick 139.1. Clear? Are you clear here? Okay. So, or if this is not the return which you are filing the first time, you will have to tell, as I told you, if you have not filed the return, the department may issue notices to you if they have information that they have that you have income but you have not filed. So in that case, you will be filing the return in response to the notice. So in that case, you have to mention under which section the notice has been issued to you. If you are not voluntary filing, then you will get a notice, then you will be filing the return against the notice, then this thing will be applicable. Till then, this is not applicable to you. Okay. So then what is next? Nature of employment. As I told you, we are all salaried people. We are filing the returns for salary. You have to tell the nature of employment you are in. Whether you are a central government employee, state government employee, public undertaking, pension years, or others. Okay. So this is the category you have to fill. Most of them are under private category, then you have to take others. Then if you are a pensioner, then you have to take as pensioners, or if you are a state government or central government, you have to accordingly mention. Is it clear? Okay. So if it is defective return, the next item is with regard to defective return. If the returns which have been filed are not filed correctly, then it will be considered as a defective return, in which case you have to again file the revised returns. So you will have to perfectly know whether you are filing it perfectly. Otherwise, you will end up filing the returns again and again and getting into problem. Okay, so this is not applicable for you, because if it is revised return or defective return, this you have to mention the details of the returns which are already filed, so against which you are filing. So this is presently not applicable for us, and this is very important for us now. Okay, so can you say this? Okay, are you opting for new tax regime? It is mandatory for you people to mention whether you are filing under the new regime or old regime. Okay, so for that you have to be very clear to know and decide whether you are doing tax computation as per the old regime or as per the new regime. Only when you select this, accordingly the returns will have to be filed. If you select, if you are opting for new regime, yes, then you have the returns and the taxation will be to be filled as per the new regime. If you say no, then you are going as per the old regime. Okay, so you have to first select yes or no, and then accordingly your returns will have to be computed. Okay, I think hope this is clear. Next, are you filing the return of income under the provision of 199 but not otherwise? As I told you, even though you don't have income, there are certain information or conditions under which you have to file the return irrespective of your income, like foreign travel, your electricity bill, or certain things. Under that condition, you will have to select yes, otherwise it is no. So most of the time you will have to furnish no. Okay. Have you deposited? So these are the things which have become mandatory now, as I told you here. So this is what is the conditions. Have you deposited amount or aggregate amounts exceeding 1 crore or more in the current account during the previous year? Yes or no? So if at all it is yes, then you will get covered under this 139(1) proviso. Okay, this is the next condition. Have you incurred expenditure amount aggregating to rupees 2 lakhs for foreign travel? So even if you don't have income, you have done a foreign travel, incurred more than 2 lakh rupees, then you have to file the return. The department says you have income and spend 2 lakhs for a foreign travel, but you don't have income to declare and file the returns. So if any of these conditions are satisfied, irrespective of whether you have income or not, you have to disclose your data to the department. You have to file the returns. And this is one more thing. Have you incurred expenditure on amount or aggregate amount of rupees 1 lakh on consumption of electricity during the year? So that means if any person is paying 1 lakh rupees as electricity bill during the year, the department is not ready to accept that you don't have income which is to be filed, or you don't have income below the taxable limit. If you are paying electricity bill of 1 lakh, then your income will be 10 times of that at least. So in these cases, even if you are considering that you don't have income, you have to disclose and file the returns of whatever you have. You cannot escape. Okay. So these are the conditions which are applicable only in respect of mandatory requirements. Okay, I think this is clear. Now the second part, as we have discussed, this is the second part where we disclose the gross total income. Okay, before we come to the gross total income, I want you to understand that before we go to the gross total income, which is part B, you need to first update part C and D, which is very important based on other info. We'll go to other information. Okay. C, D. Okay. Part C. So okay, we will go with this gross total in part by part. So first thing is gross salary or pension. So you will have to provide the details of gross salary. As I told you in the computation, what is the gross salary you have? I have given you a computation format already. So once you have computed that, that will be the base which you will be keeping for updating this document ITR. So update the gross salary here, which is as per the form 16. This is as per the form 16. You remember I had told you value of perquisites. So if at all there is a perquisite in the form, you will have to mention that separately. This is profit in lieu of salary. This most of the cases it is not applicable now, and it is not practically which is happening now. So you will have nil here. So under salaries, you will have salary under general salary, then perquisites. Then what will be having is you will have deductions under section 10. So deductions, when it comes to deductions, it may be HRA allowance or it may be any other allowance which is given by the company in form 16. Okay, so if it is not given in the form 16, you have to work out on yourself and you have to update it over here. What is the exemption you are claiming under section 10 and mention the amount over here. Then comes net salary. So gross salary minus deductions under chapter the 10 under section 10 will be net salary. Out of that, what I told you, for standard salary people, you get a standard deduction of 50,000 rupees. So standard deduction will be available in the form 16 also. Otherwise, also you can take 50,000 standard deduction if you are not opting for new regime. These deductions are available only if you are opting for old regime. Okay, deductions under section 10 or deduction under chapter 6, the standard deduction is applicable only if you are going as per the old regime. Okay, so you can claim standard deduction. Then entertainment allowance is not there, not applicable, it will be zero. Then professional tax. So there will be professional tax deducted as per the state law. As per the state laws, so you will have to mention what is the professional tax that has been deducted by your employer during the year. It generally, as I told you in Karnataka, 200 rupees is the professional tax to be deducted if the salary exceeds 15,000 rupees per month. So if you have 200 rupees per month for the year, generally you will have 2,400 as the professional tax which is there for the year. So then comes, this is the total taxable salary. Gross salary minus deductions under section 10, that is exemptions, minus standard deduction and PT is called income chargeable or taxable under the head salary. So this is the major portion for everybody to understand because we are concentrating on salary income. Okay, I hope very clear. This is basically information which is procured from form 16. You should have form 16, as I told you, as a base for as a proof or a documentation for income you have disclosed here. In case there is no form 16 provided, you should have the salary certificate in the same format for you to mention this data. Okay, so now the next item is income from house property. So you have to mention, as it's been told, ITR 1 is generally for people who have only one house property. It may be either self-occupied or let out or deemed to be let out. It cannot be more than one. So mention which is the one. Accordingly, if it is let out, you will have to mention, as I told you, the gross rent received. And next thing is tax paid to local authorities. This is nothing but the property tax. So net in the gross receipts from the rental property minus municipal tax is called the annual value or the net annual value of house property. If at all it is self-occupied, your rent receipt will be zero, so you cannot claim property paid, the tax paid on property. So net annual will also become zero. So then, as I told you, standard deduction on in rental income will be 30% of the annual value. So to whom it is available, only if you have annual value here, you can work out 30% of this annual value as standard deduction on salary. So if it is a self-occupied property, you have no rental income, you cannot pay property tax, So net annual will be 0. So deduction under house property also will become 0. However, interest paid on borrowed capital, as I told you, irrespective of the three categories, you will be able to claim the interest payable on borrowed capital, provided this interest is paid for in the loan taken from financial institutions. You cannot tell I have taken from my mother, I have taken from my father, I have taken from my cousin, from relative and claim interest. No. Only if this interest is paid on loan taken from the financial institution on construction of the house property, only then you can claim interest on borrowed capital. That will be claimed here. So if you have rental income, show property tax, gross annual value, and 30% of deduction and interest on borrowed capital. So if you don't have rental income, what will happen? This item will become negative. So it will become a loss. So salary income minus whatever loss will be set off against the income from salaries. This is how income from salary and income from house property will be available. Property paid on own house stayed. Property tax paid on own house will not be getting deduction because you don't have any income from the house property. So this deduction will not be available to you. Okay, sir, it will not be available. So you can claim only interest payable on housing loan as a deduction if you have self-occupied property. Okay, so then what is the next item which is applicable for ITR 1? So the next item applicable for ITR 1 is basically, so as I told you, okay, arrears of unrealized rent received during the year. Okay, then if you at all you have any arrears, so presumed current year income you have something. If you people have not paid the rent, then you need to mention the unrealized rent details. Or if you have realized previous year's rent here, that also has to be provided here. Okay, so the net of this computation will be called as taxable income or loss under the head house property. Okay, so salary will always be positive income, but house property can be a positive income or it may be a loss. Okay, are you clear? So this is part B2, that is income from house property is B2. Now coming to B3, that is income from other sources. So income from other sources basically, as we have discussed, it generally includes savings account interest, your FD interest, RD interest, whatever interest you have earned. Dividend, as I told you, is taxable in the current year. Even dividend income is taxable here. And any other income you have which is not classifiable under the other heads can be classified here as income from other sources. And you have a special deduction. So if there is pension, family pension, see, there is always a confusion of pension, whether it is considered as salary or it is other sources. So if you are a regular pensioner, it is salary income. But if on the demise of a person, if the family gets the pension, then it is considered as income from other sources. So since the income is changed from salary income to as a pensioner to a family pension, the benefit of standard deduction for family pension is separately given under section 57. Okay, so family pension will have to be considered as salary income from other sources. Okay, so they also will go for ITR 1 only, but under income from other sources. Hope you are clear. So what is gross total income now? Since this form considers only three income: salary, house property, and income from other sources. Gross total income for ITR 1 is salary income plus or minus income from house property plus income from other sources. The total of this is called gross total income for ITR 1. Now, what is ITR? After that, what after ITR gross total income? So once you know what is the gross total income, you have to next what you have to do is you have to arrive at what is the deduction available under chapter 6A. As I told you, you have deductions from the gross total income before you arrive at the total income. So you have to give section wise details as to under section 80C what is the benefit you have, under 80CCC what is the benefit you have, or various sections. Section wise details have to be provided as to which section how much deduction you are claiming and you will have to have documents for each deduction which has been claimed from this. Okay, so gross total income you have, then you have deductions, then comes the tax payable, computation of taxable income. That is the tax. How do you compute the tax? So as we discussed in the format also, first arrive at the gross total income, then know the deductions. The gross total income minus deductions is the taxable income. Now you know this is the taxable income. Now I have to do the tax computation. So here it is very important that you have to first ascertain, as I told in the first sheet, you have to decide whether you are going for new regime or old regime. If you are going for new regime, no deductions, no exemptions, straight away gross total income will be taxable here. Okay, if you are going for the old regime, then gross total income minus deductions, then you will come to tax payable here. So if you are going as per the new regime, you have to compute tax payable as per the new regime. If you are going as per the old regime, compute the tax payable under old regime. So first identify the tax. As I told you, check whether you are eligible for rebate, claim the rebate. So what is the tax payable of the rebate, if at all you have? Okay, then health and education cess will be applicable for everybody, as I told you. Okay, then total tax and cess, then relief. This relief is not, you do not worry about this. Relief is something which you get on arrears of salary which is being received by the government or non-government employees. You get a benefit of section 89 on arrears received. So this will not take up for discussion now. Now, as I told you, if at all there is any tax payable after rebate, okay, health total tax, so you have other information, then you will have to pay interest under section 234B and C. This will be automatically calculated by the department. You don't worry about that, the calculation here. Once I take you to the departmental website, ITR1 online filing, or there is a file which is available by the department. We can use this. Okay, we can use this, which will compute the interest by itself. Okay, so then, as I told you, if at all the returns are not filed in time, there is a penalty which has been levied, but the department is not considering that as a penalty, because for penalty the department has to issue a notice, but this has to be paid voluntarily. So this, they have named it as fees under section 234F. This is the late filing fee or the late filing penalty which has to be paid before filing the return. Without, if you fail to pay with file the returns without before the due date, then unless you pay the late filing fees or the penalty, you cannot file the returns. Okay, so then the total tax plus the late filing fee plus the interest, only when if you pay all this, then you will be eligible to file the returns. So it will say this is the total amount minus total taxes paid. As I told you, total taxes paid will be considered, that is total of TDS, total of self-assessment tax paid, advance tax paid. Then you come at arrive at the balance payable. If at all you have balance payable, you have to pay before filing the returns. Or if you have paid more taxes, you can claim a refund. I think you are clear. First is gross total income, then deductions, then tax computation. Okay, this is part D. Now coming to part E, other information. So this is what is important here. I had asked you this question. How many of you remember? Other information which is mandatory to be given. So what does it say here? Details of all the bank accounts held in India anytime during the previous year. Can you say this? So you have to provide details of all bank accounts held in India at any time during the previous year. Even if you have opened and closed during the year, if it was there and existing even for a single day, you have to provide details. So what details you have to provide? IFSC code of the bank, the name of the bank account, the account number, and if you have more than one account, then you have to select which account you want to be linked with the department website for any refund being issued. So if you have one account, that will become a refund account. If you have more than one accounts, you can select which account you want to link for department refund. So very clear, the department says you have to provide details of all the bank accounts you have in your name. Okay, I hope this is clear for you, which is where everybody make a mistake. Then details of advance tax and self-assessment tax paid. So as I told you, if at all there is any tax liability, there will be either TDS or it can be by way of advance tax, or if you have not paid anything at the time of filing the returns, you have to pay self-assessment tax. So part E is the place where you have to provide details of any advance tax that has been paid or any self-assessment tax. So any amount which you have paid before the year end, that is before the March, is called advance tax. If at all any amount is paid after April, okay, that is after March, from 1st April till the date of filing, it will be considered as self-assessment tax paid. So either the advance tax or self-assessment tax which is being paid by you will have to be covered here. Okay, so what details are required? BSR code of the bank which is being where you have paid the tax, the date of deposit where you have paid the tax, and serial number where you have paid the tax, and the amount of tax paid. This is the details you have to mention. If you have paid one challan, update one challan. If you have paid 5 challans, each challan with the date details challans has to be mentioned correctly. One important thing you note, if you make a mistake of any serial number or anything here, this amount will not be considered as tax paid by you. The department will send a notice that this amount paid by you is not available in our records. So give correct details or you pay the amount again. So you have to be very clear in any of this form. Any mistake you make, you will have to you'll end up getting a notice saying there is a mismatch or it is a defective return. I hope I am clear about this. This is details of advance tax and self-assessment tax paid. And next comes details of TDS. So if at all any TDS is being done either in Form 16 or in Form 16A, other for salaries or for any other amount, the TDS amounts and TCS amounts will have to be reflected in this schedule. So what is the details you have to mention? TAN number of the person who has deducted the TDS, name of the deductor who has deducted TDS to you, whether it is the employer or the bank who has deducted TDS, and what is important, what is the gross amount they have paid you, that is the gross salary, or what is the gross interest, or what is the gross income they have paid you on which TDS has been deducted. Year of tax deduction and collection at source. This is also important. There are chances that they deduct TDS of earlier years or problem in that. So you need to mention for which year the deduction has been done. So you have to mention 2020-21 for the relevant year. Then you have to mention what is the tax deducted. So tax deducted is what you have to mention, and this has to be as per Form 16 and 16A. Okay, and you have to mention of the tax deducted how much you want to claim in the current year. So there is option, department says TDS is already been deducted. If you want to leave it to the government, you can leave it. You can say I don't want to claim, put 0. Otherwise, you want to claim, you have to mention this amount has to be claimed the current year. Are you clear on this? So other information where we mentioned taxes, advance tax paid, self-assessment tax paid, and then the TDS TCS paid. The total of this will come as total tax paid here. This is the total of total tax paid, and this is what will appear in your 26 AS. If at all what you are disclosing here is not appearing in 26 AS, then you will get a notice for sure saying you have showed X amount as tax paid, but we don't have record of that. So you will end up paying the amount again. Okay, so this is what is very important. Then what is the next important thing? Verification. So the department has given you a voluntarily to file the returns on your own. The department is not demanding anything. They are telling you, they have given you a free hand. You decide how much your income you have earned. You disclose voluntarily how much income you have, how much deductions you are eligible, how much tax you have to pay, how much you have paid. Everything is given by you voluntarily. So you have to give a verification saying I, the name, your personal name, son of, your father's name. Generally, this is as per the PAN. Your name and son of or daughter of your father's name as appearing in the PAN. and you are filing the return in capacity of what? So if you are individual, on what capacity you are filing? You are filing in your own capacity. Okay, so you have to sell self. Why will this come here? This is important, relevant only in case of companies or a partnership firm, where you will tell, I so and so, daughter of so and so, I am filing the returns of my firm or my company in capacity of a partner or a director. Then only it makes change. For individuals you will be self. Okay, and I am holding permanent account number, so you are mentioning here that I so and so, I am having this PAN number, and I am authenticating and agreeing that this is everything given by me is correct and clear. Okay, so this is what is the simple form which they call as Sahaj for salaried people. So now I hope you're all clear as to what is ITR1. Okay, so ITR1 basically will ask you basic information. There are three parts of Sahaj. One is part A, general information. Part B, that is finding out the gross total income. Part C is nothing but deductions available from gross total income. Then part D is computation of tax payable. Part E is your bank details. Then next we have tax paid details, either in the form of self-assessment tax, advance tax, or TDS. So with this, your form is complete. If you are a salaried person, you have all the data with you now. This, your form is ready to be filed. Are you all clear? Are you all clear? So this is what was the agenda for today. Okay, so I think we are clear as to how to fill up the form and what are the basic details which are required. I think with this you are now clear as to what documents you have to make yourself ready with, and you have to print this form and update it manually before we go filing online tomorrow. So this is what is important for today's session and for you to get ready for filing your returns tomorrow. I hope I am very much clear on this. Now, so what is the difference between ITR 1 and 2? Now I will take you to ITR 2. We'll not discuss in detail. Basically, it will be the same thing with some change, additional things with regard to other income, which we will not discuss, but I'll just show you as to why, and people call this as such, why ITR2 is again available for salaried people, but it is not a simple form. Okay, ITR1 now, as we discussed, is just a 2-page return if you take it manual. Now we will be going with ITR2, where I'll give you a macro view. I'll not discuss in detail. I'll just give you a macro view or what all it contains, what sections it contains. Basically, basic information. Basic. So this is ITR2. So if you are a salaried employee and if you don't satisfy the conditions for ITR1, then option available for you is ITR2 only. So what does it say? ITR2 is for individuals and HUF not having income from profits and gains of business or profession. So if you are a salaried individual in HUF, if you don't have business and profession income, then you will go for ITR2. That means you have income from salary, income from house property, any number of house properties, and you have income from other sources, and you have capital gains. That also is covered here in ITR2. So, but we'll discuss what is relevant for salary only. Okay. Again, here there is no change. Part A is general information, which is ditto 1-to-1. Okay, there is no change. Only thing is you have to provide additional detail as to the residential status, because as I told you, ITR1 is only for resident. ITR2 is for non-resident also. So there you have to provide details of residential status. whether how many number of days were you there in India, and if you are not in India, then jurisdiction of your residence, which country you are, tax identification number of the previous of the other country. All this information is available, applicable for non-residents. So this is basic details which they are going for non-resident. Otherwise, generally it is same. And as I told you, the additional information they are asking is if you are a director of any company or if you are holding shares in any company, you have to provide details of the name of the company, the PAN number, share details, and directorship details. All these are mandatory in ITR 2. Okay, so this is the basic information which they are considering in ITR 2. Okay, so this is ITR 2 basic information. So once you go with this, now ITR form has schedule wise updation. It's not like you just update a gross total income. No, you have to update individual schedule in ITR 2. So what does it say? This is schedule S, which says about salary. You have to provide in detail details of the schedule. What here you have to mention in name of the employer, nature of employment, TAN number of the employer, address of the employer, town, state, pin code, and the details which you are updating in the gross total income, you have to provide separately here in the schedule for salaries. Okay, this is the difference when you go for ITR 2. Then similarly, house property, what we were doing there, we were just updating total income received, rental income received, property tax paid, deduction claim. No other details we are filling, only one property we have. But if you have more than one property, then property wise, these details have to be provided. What are the details they are asking? Address of the property, of the rental property or self-occupied property. You have to provide the entire address. Whether it is co-owned, that means whether it is a joint property or a self-property. Then if it is joint property, how much is the share of your ownership? Then if it is joint property, who is the other person who is owner? What is his span? And what is his share? So all these details will have to be updated if you are going with ITR 2. This is all mandatory information. And you have to tick let out self-occupied and deemed property. And this information again is as simple. What we were updating in ITR 1 in compact, the same thing will have to be updated here. Gross value of the property, then property tax paid, and what other details, interest part. But it is a separate schedule you have to update. If you have more than one property, so you have to update it. Property 1 separately, property 2 separately, wherein you will have to even give details of the tenant also. See here, PAN name of the tenant if let out, PAN number of the tenant if let out. So all these details will have to be provided in case of rental income being received, and if at all, if you have given benefit to them, because they will be claiming the HRA, the owner has to provide the details of this tenant also, giving his PAN. This is how department cross verifies. So this is schedule house property. Then you have schedule for capital gains, which we are not covering in this. That is a major thing. So capital gains will cover almost many pages. If you see here, the number of pages for form 2 is 26. Okay, as against 2 pages for ITR 1, ITR 2 is 26 pages form. Okay. Yeah. So then it comes to again other sources. As I told you, we were mentioning total amount of income from other sources. Here you have to mention it separately in income from other sources schedule. That will cover, you have to show gross dividend separately, interest from savings bank, interest from deposit account, income tax refund, or any other income. That has to be separately shown in the schedule. Okay, you cannot mention the total amounts in one place. It has to be separately shown. Okay, then after this income from other sources, you will have a separate schedule CLYA. So if at all you have any loss carried from the for previous years, then ITR 1 is not applicable. If you have any house property loss carried forward, or any deduction or capital gains loss which is carried forward, then unless you update CLYA, CYLA, you cannot go further. So this is basically with regard to capital gains where you will have carry forward loss from 1 year to year. So you have schedules here. See here, even deductions. There it was deductions. Total summary. Here again they are asking you have to update it. Chapter 6A section wise in Schedule 6A. You have separate schedules for each thing in the Form 2. Then you have ATG. So as I told you, ATG if you have to update this under Form 2 where you have to give address of the person, check out whether it is 100% deduction or 50% deduction, give deductor's name, PAN number, what is the amount, eligible amount, everything will have to be provided in the specific schedule. Then schedule of AMT, this is not relevant, ignore that. So this is schedule of this specified the income taxable at a specific rate. So these are the different rates under which you have taxable under the new tax rate. So this will not be applicable for you. Details of exempt income. So if you have any income which is exempt, as I was telling section chapter 6, this exemption under section 10, if at all you have exemptions you have in the previous year, apart from mentioning in the respective salary income, you have to provide details separately. See here. Since this is applicable for non-residents, you have to give details of income and assets from income outside India. So this is not applicable for you. So most of the information will not be applicable, but only thing I want to make sure is you have to provide entire details in a separate schedule, not in a consolidated form. And this is very important for any people having salary income above 50 lakhs. Any income, it not be salary. If at all any person having income above 50 lakhs, then you have to give assets and liability details. That includes A, immovable property, B, movable assets, and then including jewelry, bullion, and even financial assets, bank balance, shares, insurance policies, loans, cash, liabilities. So assets and liabilities is very important thing which will be applicable for any person having income exceeding 50 lakhs. Then again here, as I told you, we have schedule TI for computing taxable income, that is schedule salary income, income from house property. This is a summary where it comes on. So this is how it has been considered in ITR2. Then tax computation and tax liability. So taxes paid, details of taxes paid, the bank account details again which remains the same. Then the TDS details, advanced tax paid details, and then yeah, this comes to the end of ITR2. So this is ITR2 which has to be filled if you don't fall under ITR1. If you don't satisfy the conditions of employer and single house property and other income, you have to go for ITR2 or other forms which are in more detailed and exhaustive. I think we have crossed today's session for today's limit of time. So I hope I have been able to take you through the basic things which were required for you to understand the salary filing and the returns which are to be used for filing of returns. That is basically our concentration in ITR1 and ITR2 to the extent of salary income, house property income, and income from other sources. I hope I have done my best in taking you through the various forms and making you understand. So I thank you all for joining this session and making this a grand success. And if at all you have any questions, then we will be able to take this classes. Any questions, then we can